You've been here for a couple of days now, and you say that you're very much excited by this conference. Why is that?
Well, I'm thrilled because this is not just a talk shop, as President Additional has said, and we're seeing it happen. So we're seeing practical initiatives that are targeted at de-risking the investment environment and targeted at enabling deals that have lingered for some time to actually close, and we are seeing deals actually closing. One of them, the Ghana deal that you just talked about, which is a great initiative, and it shows that if we do things right, the money will come.
What are the chances of unlocking these vast reservoirs of money? They say these pension funds in Europe, they say these huge investment funds sitting around the world, run by people who are not quite sure sometimes about investing in Africa. Well, what do you think the chances are?
Well, the chances are getting better and better with initiatives such as these by the AFDB. One of the events I witnessed today was the launch of the Africa Project Preparation Facility by Afrexim Bank. Now, again, this is a case of putting essentially your money where your mouth is. So Afrexim has come out to say, look, we're going to put some money aside to help some of these companies, do the early preparation that they usually lack funding, to be able to do, such that then they can become eligible for investment, later down the line. So the more of such initiatives that we see, the better our chances. So that way we de-risk these projects, we make them bankable, investment ready, we handhold these companies, these early stage companies, until they get to the point where they can access the capital markets themselves. So there are funds springing up across the continent that exactly have the same kind of model. One of the issues also is the availability of local currency facilities, because prior to now, most investors were only interested in lending in dollars. And a lot of these dollar funds that these companies have taken have gotten them into trouble. So those are some of the initiatives that I think are improving our chances of developing the market.
And how much effect is that going to have, you think, this currency? It's been mentioned to me by a few people here as a concern. How soon will we see the results of that?
I think it would begin to show sooner than later. It would have a catalytic effect. So as projects are able to access funds in their local currencies, then these projects are not saddled with the huge currency risk. They're able to grow, and ultimately then they can access funds from the capital markets. So the outlook is positive.
Now, the President, Cyril Ramaphosa, this morning, he said 28 billion is the target for this week for deals and pledges. Do you think that's too much or too little?
It's not too little. I mean, it is much better than zero, but definitely there is room to do much more.
But you think that it could exceed 28 billion?
I am looking forward to us exceeding 28 billion.
And where is the smart money going in these, at this particular time? Where are people looking to invest? I mean, you're talking to them.
Infrastructure, because our biggest challenge is also our biggest opportunity. So across the continent, we have significant infrastructure challenges. So the Ghana deal, for example, is going to rail, Sky Rail project. We see money going into power projects, so IPPs, some of these off-grid initiatives, solar. We're looking for a future in which Africa becomes the solar capital of the world as it is. So those are some of the spaces where these monies will go into.
And from outside the continent, I mean, I know President of Ghana was talking a lot about inter-African investment, which is the future. Yeah. But from outside the continent, which countries have you seen showing strong interest here?
The countries that, obviously the largest economies have the strongest chances of attracting funding, provided we continue to de-risk our markets. So the president of Ethiopia was saying earlier that they have been able to attract significant flows of investment. So then, and of course, money is going to Ghana. I think the message in that is that where you see a government that sends a clear message that we're open for business and that we're going to implement reforms, they can and they will attract funding. Hopefully, Nigeria also is a market to be on the lookout for, and which will attract good funds.
And Ethiopia, you mentioned there, it's interesting. It's been one of the talking points of this conference for me. Yeah. Everyone's saying that the economy is heading in the right direction. And the investors, are they convinced yet?
Well, I mean, going by the president's statement today, it would seem that the investors are biting. Definitely, they've done a lot in their transportation sector. So the aviation industry seems to have been thriving. I believe also that she mentioned a lot of what they have done in terms of road and rail infrastructure. So it does look like that's a good story. Rwanda is another good story because of the pace of reforms and the perceived openness to international investments.
And just one last quick question. Also, we mentioned Ramaphosa this morning, a lot of countries have to stop doing things to keep investors away. Which countries have to pull up their socks, if you had to name three? And you don't have to mention your own.
I think you're putting me in a tight spot. But what I will say is, let me talk about what needs to be done, as opposed to pointing fingers at countries. So what needs to be done is that we need to be consistent in our policies, both in the application of the policies and in the in our adhering to those policies, and also in application of those policies to different investors. We need to encourage those who have actually invested. So there was a point Mr. Elumelu mentioned earlier today, which was that the greatest way to attract more investments is actually to enable those who have invested to succeed. So the success of existing investors, so not witch hunting, as it were, those who appear to have made a lot of money in our markets would be something that we will want to avoid.
Well, thank you very much for your insights.